What is up, my Forex for Beginners family? Okay, so today's lesson is going to be on the daily chart. So I've been focusing you guys on the lower time frame, especially the 4-hour time frame, because when you're beginning out trading, you need to learn market structure, and then the lower time frames, you have many examples. So that's why I really need you guys to understand the previous lessons, absolutely, especially market structure, especially being able to identify trend lines, channels, use Fibonacci, and especially market structure. When, look here, it's making a lower low, a lower high, a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So I need you guys to just be able to see that. And if you weren't able to see that, I was actually should have used the arrow, but making a lower low, lower high, lower low, lower high, lower low, lower high. You guys need to be able to identify that and there's many examples on the lower time frame. Why I haven't had you look in detail at the daily chart until now is because let's look. So price, it made a lower high, and now it made a lower low. But if we look at, if we use our crosshair tool here, see right here, this was the last lower high on the daily chart, and this was in the beginning of March, right? So now we're into April now, but from here to here, it was about
approximately 10 days
to make the next lower low and then transition to a lower high. So why, if you're trading off the daily time frame, you have to wait longer for a setup. So this was a possible setup. So you can see there's a 3-pin formation, 1, 2, 3, and then a bullish engulfing candle. And so this happened March 20th, and the last opportunity could have been around here. There was another 3-pin formation, 1, 2, 3. We had this big wick, and I want you to notice this because oftentimes when you see a big wick like this, chances are, especially at a lower high, we're going to be making most likely lower lows. So, and that's what happened. So, if this was the beginning of March, you could have placed a trade here and been in a trade until the 20th of March. When you're going on the higher time frame, you have to wait longer between setups, and but the daily time frame is really important because I want you to learn right now, instead of, we don't always want to wait a month before another setup, but what we want to do is study the candles, especially when there's a change in direction. So let's examine this last area here. So if you were trading off the daily time frame, which is more like swing trading, no, it's not exactly swing trading. Swing trading is more monthly, weekly, but daily, there's setups, a lot of setups every day. The daily, you have to wait longer. So let's just examine here. So we get the 3-pin formation, we got a bullish engulfing, and what we could have done is, what I'm telling you to do is examine the last candle, because the daily candle, it's got 24 hours of information packed into it. So that candle means a lot, right? So we got the 3-pin formation, 1, 2, 3, and then we got a bullish engulfing on the daily candle. So if you're trading off the daily, you can tell yourself here, you can just take your trend line tool, or I like using the trend line tool. Trend line tool, you can make any sort of line. If you want to make it straight, align it, like I told you before, align it with this line here, and then you have a straight line. So anyways, so right here we have a bullish engulfing. I'm going to mark off right there. So what we could do is, when we see this happen, 3-pin formation, we could have set, saw this bullish engulfing and set a buy trade, but our stop loss would have to be pretty large. And we're on the daily time frame. Well, let's actually measure what our stop loss would have been if we took a trade off of the daily. So bare minimum, we should have went a little bit larger. So say about there. If our stop loss was, hold on, let me move this chart. Our stop loss would have been 298 pips. So that is massive. And sure, once your account is big enough, you can take these are essentially kind of like swing trades, right? And you would have been well into profit, right? If you put a 300 pip stop, let's see what your gain right now would have been, 400. So 300 pips stop loss to make 400, sure, but that's not how you can do that. And that's kind of like what swing trading is. But what I'm teaching you is, instead of having this huge stop loss, what we do is we just mark off. So right here, we mark off where so we had a 3-pin formation, and then there's a bullish engulfing candle. We're just going to mark off with the horizontal line that this is where the bullish engulfing occurred. And what happens when there's a bullish engulfing? Usually price will most likely travel upwards. And this could have been we already measured it, it could have been a 400 pip win here, right, to the next lower high. So this went from a lower high to a lower low. This is essentially another lower high. So we could have, you could have seen the 3-pin formation and started buying. But again, I'm going to tell you the next secret part of this is we don't want to have a 300 pip stop loss. Or whatever it was, I believe it was like 298. We don't want that. But when we see a bullish engulfing candle, 3-pin formation on the daily, we mark off where the bullish engulfing candle happened. Right here is the bullish engulfing. And this is when we tell ourselves, okay, well, I saw on the higher time frame that we had a 3-pin formation and a bullish engulfing. I'm going to now start looking for buy opportunities. That's all you got to tell yourself. By looking at the daily time frame, I see a bullish engulfing 3-pin formation. I need to start looking for buy opportunities. And this is why I keep emphasizing, or why I first started teaching you about the lower time frame, because that's where we're going to go and start looking for buy opportunities. And that's why when we go into the lower time frame, we're going to examine these wicks and see where can we buy, because after these 3 candles we saw bullish engulfing. Now we're looking for buy opportunities, and all of these wicks and stuff could be buy opportunities. So we're going to jump down to the lower time frame. So I was going to use my 3 chart setup, but let's stick to 1 chart, depending on whether you guys are using the 3 chart setup or not. I recommend using the 3 chart setup, but let's just right now on this 1 chart, let's drop down to the 4 hour. So the 4 hour time frame, notice that we have a EMA 8 and 18 crossover. So when that that tells us that trend is changing. And let's examine market structure. This is why the other thing I emphasize, we must understand market structure. So the trend was down is falling pretty fast, and then we made a low here. Let's just mark that off. And now let's look, we're retracing. So we're potentially we just made a lower low. This could be another lower high. So we could continue going down, but we have to continue examining market structure. So so we made a lower low, a lower high, and from here we're expecting price it should continue down, right? It should continue down. But does it? No, it came here and kind of stopped. So I would just kind of, right now we're just noticing things, right? We're just noticing things. So I'm going to actually delete this little circle here. I just want you to start noticing things. So right here, we can make a lower low, a lower high, and we're expecting it to make another lower low, but it didn't. It came about here. Hold on a second. So you see, it's almost like you can see the trend is changing. It made a lower low, it made a lower high, but now it's starting to find support here. It looks like actually an uptrend may be forming. This is the first sign of trend reversal, right? And this big line right here, this is actually what we marked off on the daily time frame. This is where the bullish engulfing candle happened, right? This is where we marked off the bullish engulfing candle on the daily. I hope you remember that. And then again, just notice right where this bullish engulfing candle happened, we also have a crossover here. So this point right here is very, you need to study it, because this crossover on the 4 hours happening, we see that, we were expecting a lower low, but it didn't happen. We got a crossover. This is bullish engulfing on the daily. And like I said, we're looking for buy opportunities. So, okay, look here really close. So right here where the EMAs are crossing, you could have placed saw this bullish engulfing candle. You could have placed a buy right there. But here's the thing. I want you to notice, here, I'm going to put the stop loss. So the stop loss would have been approximately, it's showing 110 pips. Like, that's still pretty big. I want you to go through, I just want you guys to realize something that, I started realizing lately is the size of these candles and how much they fluctuate are larger than what it used to be. Before the coronavirus, I don't know when you're watching this video, but right now, you can see the date. It's April 1st. It's April Fool's 2020. And the coronavirus is ravaging the world, unfortunately. Yes, it started in China, but it got into the US and the rest of the world. And right now, US, unfortunately, it's accelerating really rapidly. And, I'm in Canada right now, and, it's getting, more serious here. And the market is showing us, like right now we're seeing a lot of more fluctuations and a lot more price movements because the market is scared right now. That's why you guys need to study news as well. Like, if you go to a Forex calendar or Google a Forex calendar, or, when the news events down here come out, actually study what affects, we're trading Australian dollar versus the US dollar. So, right now interest rates in the US dollar are low, so that, gives the US dollar strength, and Australian dollar was crashing for a long time. Like, it crashed quite a bit, quite rapidly recently. It's been crashing for a while, but it's been going down. It's been in a downtrend for a long time. But the coronavirus, Australia does a lot of deals with China as far as trade. So when China was shutting down during the coronavirus, the Australian dollar started weakening because it was losing, possible trade, all the stuff going on in with the coronavirus. It's affecting the economy like crazy, and it's affecting the Australian dollar and the US dollar. So you should do your research on what affects the price. But so right now, what I'm trying to tell you is our stop losses are going to be larger. That's why it's better to play small trades, and let your trades, like I keep telling you, practice 0.01 trade size. Keep practicing that. But I just want you to kind of, let's just go over and look over at AUD USD. See, before the coronavirus took over, we were able to, get, like, I was telling, I did a video on, getting in with a 20 pip stop loss. Like, look at back in the day, hold on here. That's, back in the day, we could, we could have placed, off of this bearish engulfing candle, we could have placed a 20 pip stop loss, and we would have been safe. So look at it, let me zoom in right now. Off of this bullish engulfing candle, if we put a bearish engulfing candle, if we put a 20 pip stop loss, this is the next candle, so we would have been safe. So back when price movement, look at the size of these candles. This was like nice small candles back in the day before, unfortunately, coronavirus took over. Let me just hit reset on the chart. So right now we're getting, especially during the last little while, we've been dropping. So right now the market is down, so it's better to actually sell. It's better to actually sell in going with the trend. But back to what I was trying to teach you here. So we were just looking at this line here. This is based off the, let's jump back to the daily. The daily, that's where the bullish engulfing happened, right here. So what I was trying to tell you is when a bullish engulfing candle happens on the daily and we see a 3-pin formation, we mark off that this line right here is where the bullish engulfing closed, and we can, if we want to counter trend trade, we can examine the lower time frame, and like I said, we can look for buy opportunities. So this could have been one opportunity to buy. Right now we're sitting on support. We're sitting on the EMA 50 is acting as support right now. So you can see how the EMAs are crossed. We're trending upwards. You could potentially join here. You could potentially join here. You can draw on your trend lines. This is why we study the 4-hour time frame, because you're going to see more movement. You're going to see more structure and more opportunities, right? But yeah, if you want to study the daily is very important. And this whole lesson was based on the daily time frame. I kind of went off track a little bit, but let's just go back to what this whole lesson was about. And this lesson was about noticing trend changes on the daily time frame. So right here, we could have seen, we had a big indecision candle. It has long wicks. It's like a spinning top kind of candlestick pattern. And then after that, I just want you to notice, like I said before, many times we follow the wick. So see, we had a wick down, price closed up here, and then we continued downward. So when you saw this on the daily time frame, you could have looked on the lower time frame for sell opportunities, and this is what I did. I made decent amount of money selling during this long sell opportunity, and you just mark up on the daily time frame what you notice, and then you jump down on the lower time frame, and we look for sell opportunities. Here you could have been like, okay, the EMA 50, I saw this big spike down. It tapped the EMA 200 on the 4-hour time frame, and now the EMA 18 have crossed, and I have this big bearish candle right here. Well, you could have entered right here. This is why, this is why we examined the lower time frame. So this could have been your entry. Here, this big line is from the daily, and that was, let me go back. The daily, it was where this big candle, this wick candle closed. It closed right there. So I just drew it off, went down to the lower time frame, looked for sell opportunities. So here, this was a big bearish candle. This could have been the next, it made a lower low, lower high. So I actually entered right here, and I put you can put a 50 pip stop right there. And like I said, we have to try, higher, larger stop losses. Like, let's just practice right now. We're in coronavirusville right now, so there's more fluctuations in the market, and that's making some bigger wicks. So we have to unfortunately adjust our stop loss to the market. Just like I said, every other pair, if you were studying some other pair instead of Australian dollar versus US dollar, the stop loss has to be adjusted based on the market. And right now we're having a lot of economic effects. That's, with the coronavirus and, people losing their jobs and everyone social distancing and staying home. We're in a different time in history right now, and you can see the markets are wilder, but there's more gains. Like if we set a 50 pip stop loss here, and how I got this 50 pip stop loss is because the EMA 50 is right here, so I'm going to use that as protection. This is going to be where I, plus on the daily, this was a significant level. So placing a stop loss around here is not a bad idea. Let's do the risk to reward calculation here really quick. So if we set a, let me just delete this. And so, like I said, I want a stop loss above the EMA 50. And so that's showing me a 41 pip stop loss. And now let's look at the reward. So say if we exited, say we don't always get it down here, but say we exited where the EMA 18 crossed, because when the EMA 18 crossed, it's telling us a trend change. So say if we exited there, that was a 16x. So risk to reward is 16.5. Well, that's a great trade. 16x. So whatever you risked, whether it was $5, well, you would have made 16 times your risk. And here it tells you how many pips, but on MetaTrader 4, it'll convert the dollar amount. It'll show you that, hey, I'm risking $15 or I'm risking $20. So it's easier, I think, for people to trade when they can see dollar values. So our charts, we just look for setups, and then we move over to place our trade on MetaTrader 4, and that's where we can decide how much we want to risk per trade. So say you wanted to risk $15 for this trade, well, you would have made 16.5 times $15 if you exited where the EMA 18 cross here. So this is how I use the higher time frame, the daily chart. This is how you should use the daily chart. You need to examine the individual candles because they're daily candles. They're 24 hours of price movement, so they actually mean something. So when you see a 3-pin formation on the daily and a bullish engulfing, well, let's start looking for buy opportunities, and our stop losses are going to have to be based on where the EMAs line up, as well as, I'm not showing all my support and resistance lines right now just to simplify the video for you. I removed my support and resistance, but when we enter a trade and our stop loss is based on support and resistance, the EMAs, it's called confluence. So when we set our stop loss, we have a reason for entering the trade and we have a reason for where we put our stop loss. So I hope you got some value out of that lesson. This is how we use the daily chart. We should always check the daily chart as well. Always check, the weekly. The weekly tells you a lot of information too, right? This would have been a great sell opportunity up here, but unfortunately that happened in December 2017. So we couldn't wait that long. But here would have been another great opportunity here. But okay, that's it. Thanks for listening. I'll chat with you soon.